it's not that formal of a thing. Okay. What is up, everybody? Welcome back to the Russell Journal. My name is Russell, and this is my journal entry for January 22nd. January 22nd, Sunday, January 22nd, 2023. Pretty laid back over here. Okay, coming in the week, stuff, just channel news, stuff like that. I'm still working on the risk report. I'm building a PowerPoint for it, probably more so for me than for you. But furthermore, there's a lot of stuff to talk about and then sort of shuffle into my trade setup. I have all of it organized for my trade setup, but it's kind of one of those things where I feel like it's important to show yield work. So especially because I'm planning on doing a so-and-so book report about that. So I will announce before it comes out when it's going to premiere and when we're going to go through it and stuff like that. And then what would be really great is to, if you guys want to grade my quote-unquote book report on basically on risk management. I think it's really important, good thing to do. I am going to try and have it done by at least next weekend, but it's been kind of like, it's been sort of challenging to not just, learn the stuff was pretty easy. Plenty of stuff out there, plenty of content out there as far as that stuff goes. But devising it into some sort of, consolidated thing that is both relevant to my journey and could possibly be relevant to you, and then displaying that to you in some type of format that is enjoyable. That's all, that's all a different thing. That's all a lot of different type of work than what I'm used to doing. All right. Anyway, as far as that goes, jumping back into the market and the charts. Okay. So first of all, we're going to go over a little bit of the technicals, what happened last week. And, we're not going to be too crazy as far as like predicting what we think is going to happen this week. But we will look at some of the upcoming earnings catalysts, and we'll go over and look at some of the market stuff. I don't know what those are. I'm actually kind of waiting. I want you guys to kind of be on this journey with me. So we're going to go through. I do know some of the earnings. I know Microsoft has got earnings coming out, so we'll talk about all of that later on in the channel, and really sort of look at it. So, okay. So the very first thing that's very interesting to me about SPY on the daily time frame is you've put in this pattern of higher highs here, or higher lows. I'm sorry. That's the thing that's very interesting. And the thing that that is being talked about, the narrative around all the YouTube people I follow and the stuff that I listen to, is an ABC pattern. And one of the ABC patterns that they see is this would be your A leg, this is your B leg, and you're beginning to put in the C leg to the upside. Now on SPY, I did the Fibonacci thing, 150, 100 sort of look on it. That gives you a price target of around 431. We trade 0-day to expiration contracts on this channel. So that doesn't mean a lot to us, other than that, that's just something we want to think about. One of the things I think about, and part of stuff that I want to know and think about some of this stuff from, okay, technical analysis is a really funny thing, right? So far, what I understand about technical analysis is the fact that everybody knows about it is kind of what makes it work, and the fact that everybody knows about it is also what makes it not work, right? You can really, if you have enough money. Okay, so let me put an example of this. Okay, over here you get this big move down off of the last, I think it was FOMC, right? Okay, you come into this spot of consolidation here, which at the time was formulating itself as a bear flag, yet we didn't break as a bear flag to the downside. We broke to the upside. Okay. Okay. Everybody saw that big ass bear flag that was forming here and said, we could really screw over some people and push this up. Okay. That's one side of that. At the same time, it is when you see stuff on the chart and everybody sees it, it also means it could come true because, like, oh my gosh, we could make this do an ABC thing and go all the way to 430 on SPY, 4,300 level on the S&P. This is sort of what makes technical analysis valid, right? Is that at some point we all see, agree, and behave according to it. Okay, so there's a little bit of it that you just want to be aware of it. It's not the setup. It's not my setup. My setup involves the stochastic and some of the 18-day moving averages and Bollinger Bands and things of that nature. So it's not really a setup. It's just kind of a thing to talk about as far as the market goes. All right. That all being said, what should we expect on Monday? And to be honest with you, you don't really want to expect anything. If you're looking at the daily chart, okay, I'm going to zoom this in, pull this up and zoom this in. Okay, if you're looking at the daily chart, one of the things that I've incorporated lately is a concept of swing high, swing low. And I'm not using it exactly because of the way the chain that, like, if you were trading options, I'm not using this exactly as they do it because I'm front running it a little bit using the momentum, using slow stochastic. But okay, so basically, swing high, swing low, the way it works is this point over here is your most recent high. That becomes your swing high. Okay. So if you're not in this trade right here, right, and this is just off a daily time frame. So this would be you'd have a pretty long swing trade look sort of thing. Okay, so there's two things here that are really interesting. One, you get down to over here. This is a swing low point. And what you would look for is a break of that swing low point, and you would go short. Your stop loss would be at that swing low point. And so when you break back over it, you would stop out. Okay. So then you're moving back in this direction. Your swing high point becomes here, and they would be trading a breakout of the swing high, which this typically, this dollar figure, kind of right where we are now, between here and 400, 396 and 400. That has been sort of the resistance that's defined the bear market. So if you get the break above there, you could find guys chasing it up into swing high sort of thing. Again, that is a very stupid version of what I'm talking about, but is sort of an example as to what you would be looking to see happen, break above here. So, and then the one thing about it that is interesting is you're coming into that zone to test it for a second time. Normally the first challenge of this will fail. This is the first challenge in a while. Run right up. It very well could break through there. And you could tell kind of that you've got this kind of sort of wedge thing building up on the daily that says you could possibly be going higher if you pop over that, and then so it's kind of an if-then sort of thing. Again, this is a daily time frame, so it's a very long-looking time frame where we want to go here as far as like, okay, so let's pull back. Let's go to a shorter time frame. That's not giving me what I want. There we go. Okay, so here I'm dialing it back to the 20-minute time frame. Okay, each one of these candles equals 20 minutes. All right. So for me at this point, coming in, going off of the 20-minute time frame, my next reaction will be a short in a pullback. It will be look for a break on, say, the 20-minute time frame, a break of overbought, and back to the 18-day moving average. Okay, that will be what I'll be trying to react to. Will I get that set up? Will that happen eventually? Will it happen on Monday? I don't know, but that's kind of what I'm waiting for, is this pullback from there back into the 18. And then we will see from there how cooled down this gets. One of the things I want to do point out is on here is the Bulls are using a lot of firepower to get this thing up there, right? Like they have to mean this in order to see how overbought you are. You're way up above that 20 line. You've been up there for a couple hours. But there is a few things in the Bulls' favor. If we go to the 2-hour time frame, and I want to show you this because and this will segue us into the trade I placed on Friday. Great trade, really fantastic. Happy as hell about this trade. Was my setup. It worked. I'm going to talk a lot about that here in a minute. But you can see here, you can see here where we came out of, and it's really cool because, so give me a second because I can't see that quite on my thing. Just so you guys know, reminder, you are following a guy who is blind. I literally am blind, legally blind, clinically disabled. Golly, why won't that go? Okay. Now, there we go. All right, I can see it now. Okay, so this was really cool. So I come in the morning, we get this red pullback right here, and we're not out of overbought yet, but I'm thinking, oh, I should go for it. I should get that. And I'm thinking, and I'm like, it's push pull. Should I take it? Should I take it? Should I take it? And now each one of these candles is 2 hours. Okay. Now I wasn't really watching the 2 hour other than I was watching kind of the slow stochastic for the move out. I saw the setup is usually when the slow stochastic comes out of oversold on one of the, on, any of your time frames. And the larger the time frame, the bigger the move typically. So I kind of moved it. We'd come all the way up. We'd been in overbought. Things were really wonky back up in the 1 to 5, 10, 15-minute charts. So anyway, I noticed the move was starting to happen on the 2-hour time frame. Okay. We had starting to come out of oversold. Now, the first one was here, and this was not my setup. I didn't have the move, and you could have bought into this first red candle right here. And I was just, I was like, is it going to do the move? And then like, I got all upset, and then I cried about it on Twitter. And one of my buddies, one of the guys I know over there, Nick, he's like, well, if you're questioning whether or not it is, then you don't know your setup well enough, or it's not your setup. Your setup should be just pinpoint clear. And which is kind of cool, but like after I tweeted about how I was like missing the move and I was missing the setup, I was like, well, that's true. I don't really know. So I had to stop and go, okay, well, what's my setup? Here's my setup. How does it work? Well, it works this way. So stochastic comes out of overbought, you go long, comes out of oversold, you go short, yada, 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 right? And I was able to see the setup. I was really able to see the setup. Now, I really only had it going to the 18 there. I thought they were going to stop it cold in its tracks. I didn't know it was actually going to keep going. And so what I did wind up getting to do is into this 2-hour candle with a pullback right there, that red one. I got long into that, 10 contracts, held it for the move. It held above the previous candle. The red candle held. Yeah, the red candle held above the previous candle, right? And so above the bottom of the previous candle, held that. Was a little bit of pain here in this trade. I entered this just a little too early, so I probably shorted myself about $90 that I could have made if I'd have waited for a little bit better entry. And then caught this rocket ride up through the 18-period moving average on the 2-hour time frame. turned out to be really great. It was I was in for 17 cents. I was out for 51 or 52 cents. I don't remember as far as it goes. So I more or less tripled my money at that point. Fantastic trade for me. What I did not think about at the time when I'm up 300%, I'm pretty excited. And so I just cut the position. If I had that trade to do over again, I would have set in a stop loss somewhere up high, instead of having to make 300%, I would have made 290 or 280. And I would have, and I would have set it in. I would have gotten to catch the rest of this move up. That would have turned my $350 win into like well over $1,000 win. So it could have been almost I could have almost made 1,000% on my, not just $1,000, but almost nearly 10x my money. So as far as that goes, not gonna cry over spilt milk. Got the in trade and stuff like that. Also, one of the things that was really interesting is after I sort of vented my frustration about that first trade setup, missing that, after I vented that frustration right there, one of the things that was really interesting, and I had this sort of thing, I had the clarity of thought to go like, well, you obviously don't either. You're not thinking about your trade setup clear enough, define the parameters of that. Nick over on Twitter, he commented on the tweet that said he said, well, the same thing. And I was thinking the same thing. And so, was able to calm myself. And then when I was in this trade through this pullback, I'm down $90, but I'm still very well within defined risk parameters. I'm well within defined, as far as letting this move happen, and was able to fully take advantage of that. So I was very happy about the trade, very happy about the day. Was just really killer for me as far as stuff. Again, the only thing I wished I'd have done is moved up a trailing stop loss of some type, and instead of profiting out of the trade, tried to stop out that stuff. The one thing about this, though, that made this really hard, you got up here into this area. And I have a rule. I don't like to be in a trade through Power Hour. Power Hour is kind of the Bermuda Triangle for me of market behaviors. I perform very badly there. I know that from some of the spreadsheets of my trades I have, and a lot of the confusion around that. So holding out for that last hour, that last little bit of profit, most of the time screws me over. That would have worked very well on Friday, but it didn't. So that was pretty exciting as far as the trade that I got and that I took and how well I did. Now, what else? Okay. So that is kind of how the trade setup worked out, how everything worked out. Now, the one thing that will be very interesting to see on the 2-hour time frame is if we get any type of follow through to the upside. And on the 4-hour time frame, 4-hour time frame, any type of follow through. So here we are on the 4-hour. And this is something that I think this is something else that I've been incorporating with I've seen a lot of guys talking about divergences within the market. And so I don't know whether or not what to say about divergences. I mean, they're looking for these tiny ass little divergences down here. One of the things I can say that's very interesting is you did from this low back here to this low over here. You've now on the 4-hour, you've put in a higher low and somewhat of a higher high. So you do have higher lows here. So you do have bulls coming in, not letting it get too oversold to pick this thing up and run it back in the other direction. So I think that's cool. I am looking at that a little bit. Probably need to do a little more research. Doesn't mean a whole lot for me. Again, we're looking for a reaction here. I'm looking to see if we'll make a run at that swing high up tomorrow. Again, momentum will basically tell me that. And so and a lot of stuff will work itself out as far as the futures guys will we're gonna go look at the Dow futures, see where we're at. Okay, so the Dow is down 20 points right now. S&P is down 5 points, and the Nasdaq's down 20 points. So it's pulling back in the after hours here, profit taking something, blah, blah, blah. Insert your favorite narrative piece. The big thing that I want to talk about this week is you've got earnings coming out. The big kahuna, I think, for most of these is Microsoft. Microsoft is reporting earnings, I believe, on Wednesday. And so you're going to get, we get those earnings on Wednesday. That is going to be, I don't know. I don't have any expectations for that. You know, I imagine if it's good earnings, then we'll see some follow through on this. And if it's not good earnings, then you'll start to see some of the pullback. I don't think that it can be too steep of a pullback in any direction, because on February 2nd, we have Apple is reporting earnings. So as far as things go right now, I wouldn't expect the market to be making big swings. And that I would expect the market to hold up, to wait to hear what all the different earnings are. You do have FOMC, I believe, on February 1st. Well, let's go look at this. Okay. I'll read you guys the list of all the stuff that's going on. We'll go look at the list of everything that's going on. This week coming up. Okay. Monday, nothing scheduled. Tuesday, we've got Empire State Manufacturing. Oh, this is this week. This is the wrong week. Next week. Nothing. Okay. Mondays, supposedly leading economic indicators. I don't know what that means. S&P Manufacturing PMI flash report. S&P U.S. Services PMI flash report. Wednesday, there's nothing. Initial jobless claims on Thursday. You get the GDP estimates. Okay, so Thursday is going to be a big deal. Durable goods orders, core capital goods, Chicago. Okay, so we get some GDP numbers on Thursday. That's going to be really interesting. Disposable income. And on Friday, we get the PCI, we get the PCE. Ooh. Yeah, so going to be a real wonky week, I guess. Okay, so, and I've seen it do that, right? This is FOMC, this one up here. This was going into that CPI reports and different things of that nature. So you can see it gets real wonky in up here. I think option sellers want to hold it up in here. It's a great place for them to sell calls and puts alike. And really mess with the tape. I think that it's got a vested interest in holding itself up here. So anyway, that's where I am with that. Okay, so what do we do? So we talked about the chart, ABC pattern, possibly look for rejection at this level, possibly back in the other direction, some type of double top scenario here. I talked about my trade, which was fantastic. I was very happy with it. Came in on the over as we moved out of the oversold on the slow stochastic. Made a great win. Could have been better, but we're happy with it. And then lastly, we talked about earnings. We got Microsoft coming up this week. I saw AT&T, Verizon are doing it this week. Johnson & Johnson is reporting this week. Apple next week. So this week is probably more of a big deal between Microsoft, And I said Intel is also reporting. Some banks also doing some stuff still. So it's a bit of, aside from Microsoft, I'd say it's a low key week. Johnson Johnson a little bit. They're a big chunk of the Dow Jones. So okay. So and then if you're interested, you can follow Earnings Whispers. Does usually a pretty good job. If you're looking for somebody to tell you where to find what earnings are coming out this week, Earnings Whispers does a good job. And what else? Yeah. So again, just kind of being prepared. Looking at this, going to see if we can find some follow through here. I don't really know where we go from this point. The 4 hours got lots of room on it. The daily doesn't have so much room to go to overbought. So 1 or 2 days of strong buying could lead to another type of pullback. And these wedges, they like to do that. They like to hit this thing and then they pull back and create another lower high and then another lower high. So if it's going to break out, but this is a daily chart too. It's kind of massive. So anyway, that's going to do it for me today. I hope you guys all have good luck trading this week. Russell Journal's written and hosted by me, Russell Liss. We're produced by Social Media Shows. Executive producer is Maria Pereza. And until tomorrow, pretend I said some sort of catchphrase.